Hey guys, this is episode number 45. We are at 45. We're almost closing on 50 episodes of Daily Thoughts with David. Today we're going to talk about tax season 2023, which is going to be covering the tax year of 2022. So we're going to be talking a little bit about taxes and some of the new things this year that are going on. For all of you crypto and NFT guys, things are starting to get very interesting when it comes to tax time. So there's going to be a little bit of section about that. But before we get started, I would love for you guys to go ahead and subscribe to the channel, David Coleman, down below. Ring that notification bell and like the video if you enjoyed this. I'm talking today, like I said, about taxes and crypto and NFT taxes for a part of this. But I have some other videos on this channel that include a small short guide to NFT and crypto tax. And we're going to continue to talk about the tax season as we get closer and closer to April 18th, which is the tax day for the United States. So if you would, go ahead and watch some more videos on the David Coleman Daily Thoughts playlist and see if you like them, enjoy, and subscribe to the channel. Let's talk about tax season 2023. I have been doing taxes now, and this is my personal experience on taxes. I've been doing taxes since 2013. And I was in the tax industry before that, doing customer service for one of the big name stores in the tax industry since 2011. So I've been around the tax game for a while now. I'm relearning how to do returns, and I've been doing some returns this year. So I've been getting back into it, and some of the changes that have been happening here recently when it comes to taxes have been very interesting, especially around NFTs and cryptocurrency and Web3. This year on the 1040, which is your tax return form, there are some more questions about cryptocurrency and NFTs. They ask you if you have any digital currency or if you traded any digital currency in 2022. So the IRS is starting to, and this also includes the governing bodies of each state and the federal government, including Congress, who make the laws around taxes. They are starting to tighten down on the cryptocurrency market because the cryptocurrency market saw some very, very interesting events in 2022 and 2023. We had FTX and Sam Bankman-Fried with the implosion of FTX, which I believe was the second biggest crypto exchange in the world. We've seen the SEC, which is the Security and Exchange Commission. They've been coming down very, very hard on multiple different cryptocurrency projects, and that's been very interesting to see as the regulators and the regulations around NFTs and cryptocurrency are starting to develop. However, the SEC is not giving any guidance to these cryptocurrency exchanges or cryptocurrency projects on what they need to do in order to be compliant with law, with tax law. And security law. So it's very interesting. In the tax world, it's very interesting right now because there are so many people that are flowing into the Web3 space, which is cryptocurrencies and NFTs. A lot of people are taking their money out of traditional banks and CDs and bonds, even precious metals, and putting them into cryptocurrencies because of the returns and because of the ability in order to basically be a bank for yourself. The banks, after the past couple of weeks, we've talked about this before on the channel, where Silicon Valley Bank and Signature Bank and First Republic Bank and Credit Suisse and all these other big old banks are absolutely toppling because of absolutely awful management of assets, specifically in the bond market when it comes to banking. Banks are basically gambling with your money in the bond markets and are losing terribly because they suck at their job and they don't understand how to take care of finances and they don't understand basic economics. And so people are taking their money out quickly from the traditional financial systems and putting it into Web3 and cryptocurrencies. And that is impacting the tax space quite a lot because the tax law around cryptocurrencies and NFTs is evolving extremely quickly because there are not any exclusive laws or an exclusive section of the tax law that identifies and regulates cryptocurrencies and NFTs. This year, recently, they've actually come out saying that there could be a possibility that NFTs would be considered a collectible, which is taxed at a different rate when it comes to capital gains than even regular capital gains For instance, when you have a capital gain or a capital loss, which means you're taking an asset or security of some kind, you're buying it at a cost basis and then selling it later for either a gain or a loss, you are then taxed at a certain rate based on 10-15% at the federal level of how long, well, that's for long-term capital gains. Then you have short-term capital gains, which are normally taxed at your ordinary income rates. So the tax laws around, and just so you guys know, the capital gains conundrum right now when it comes to tax law and law in general is very interesting because it's a way for people to buy stocks. Traditionally, it was stocks and other securities, I guess, and that may include gold and precious metals as well, and they're in a smaller aspect. But the capital gains is there in order to protect people from paying 40% of their income off of capital gains to the government after they hold their stock for a long period of time in IRAs or 401ks are kind of a different thing when it comes to the tax laws around that. But it is purpose built in order to help give people a tax break for basically saving their money and investing it into the stock market, which helps then those companies in the stock market have more capital, build their businesses quicker, and create more wealth. Right. So those capital gains in the past, when it comes to cryptocurrencies and NFTs, have been just blindly shoved onto cryptocurrencies, and the capital gains and losses, especially in the long term, were taxed at capital gains rates of 10, 15, 20% based on your income. In the future, the IRS has come out with some guidance here that NFTs specifically would be taxed at a collectible capital gains tax, which is higher than the regular capital gains tax of 20%. The collectible capital gains tax when it comes to long term is 28%. So the IRS is cracking down on all different kinds of Web3 projects and founders, NFT project founders who are thinking they're making a ton of money, tax free basically, but they don't realize that they're actually going to be in a lot of trouble when it comes to tax time if they report their income at all. A lot of these exchanges, when it comes to cryptocurrency exchanges and NFT exchanges, these guys are trying to become more and more in compliance with the SEC rules or the IRS rules when it comes to being a securities exchange. But the IRS and the SEC are not giving almost any guidance to these guys, and they're getting themselves in a lot of trouble, but they're not able to follow the rules because they're not sure what the rules are. They ask for IRS and SEC regulators to come in and say, hey, will you let us know what we're supposed to do here? And the IRS and the SEC doesn't even respond. So the government has made it almost crystal clear at this point that they have no intentions of trying to be on the side of Web3 people because it gets in the way of their central bank digital currency. And it kind of subverts the traditional financial systems that are out there right now in banks and stocks and stuff like that. And it goes around them and allows people to do banking for themselves, allow them to have custody of their money themselves. And that frustrates the government for obvious reasons. The government wants as much power as they possibly can get. And a lot of people that are in the cryptocurrency space are in the cryptocurrency space because they want to take power back for themselves and be able to have money for themselves and be able to manage their assets the way that they want. So very, very complicated and interesting side of Web3 and taxes at the moment. If you guys would like to hear more about the updates on the IRS and the SEC when it comes to cryptocurrency and NFTs specifically, because those are evolving even faster, I would love for you guys to go ahead and follow me on this channel, subscribe to the YouTube channel and to the Rumble channel if you're watching this on Rumble. Go ahead and go to Instagram and go to David Coleman YT to follow my Instagram channel there. And then on Twitter, I'm Colma63ETH. I do a lot of financial stuff on Twitter and a lot of NFTs and cryptocurrencies, which is why I'm so much into this. If you guys need help with cryptocurrency or NFT taxes, I'm your guy. I've been doing my own here, and I've been helping a lot of people out with cryptocurrency and NFT tax advice. So go ahead and go to Twitter, DM me. I'll take care of you, and we'll go from there. Besides that, Rumble is David Coleman 27, and besides that, we will see you on the next one, episode 46. I really appreciate you guys watching.